think they would never go negative?
It's very unlikely. The problem is not that they wouldn't like interest rate to be lower, but they don't feel that going negative is actually going to be beneficial. And I think that Steve Leisman put it exactly right, that the reason that the ECB didn't lower rates further is because it's not clear that that would be beneficial at all. So the issue with this one, it tells us that monetary policy is limited in its ability to deal with this kind of shock.
How would you describe this kind of shock relative to the 08-09 one that you were there for? And, there was a great line by Dave Zervos, the economist today. He said, this is about solvency, not liquidity. These things all become intertwined if it goes on far enough. My point is, how different could the response be in order to address solvency, business operation issues, as opposed to the liquidity kind of issues that were really at a climax in 08-09?
So the Fed really can't deal with pure solvency issues. What it can do is make sure that the financial system actually functions well. And that's really what its objective is going to be, and what it eventually was successful at doing during the crisis. I do think, however, that this shock is not as existential. It's not as serious in one sense, but very serious in another. In that, no matter what, eventually we're going to be able to control this crisis. The problem is that right now, it does seem to be spinning out of control, and we haven't had a lot of help from the federal government on this. So, and this is one of the reasons I think the markets have reacted so badly, that thinking that we can solve problems by cutting taxes is just not sensible at all. The real issue is, how do we contain the virus, and where do we spend our money to make sure that we get the minimal effect of the virus on the economy and on death rates. So
right.
That's really what's key.
I would just say it's not so much about cutting taxes. It's about not requiring extra expenditures for people whose income now needs to go towards stockpiling, Quincy, for example, paying medical bills, dealing with their kids not being able to be at school and so forth. Let me ask you about the markets today.
Even on that, I think that
Go ahead, Fred.
That's really limited to the key effects are to make sure that we actually spend the money to get testing done and so forth and so on.
Sure, fair enough. All right, so Quincy, we have about 2 hours till we're going to hear from the president. What are markets anticipating? What are they worried about? Because we have come well off the highs of the session.
Well, they don't want a repeat of the other night, because as you saw, we actually went into the market. The futures was actually pretty optimistic going in, and then it went from worse to worse to worse. And then the market just sold off the next day. So they want to see the president has a plan. The plan is viable. If he's going to be speaking to us, have it. Maybe they told him go out there again and expunge that memory of the other night, and give the market something more to hang on to, something viable.
Is it a dollar figure the market's looking for?
No.
Is it just, the specificity around the national emergency, which itself would only unlock, what is it, $50 billion worth of funds? Yeah. It's not a huge amount. I mean, yesterday we had Scott Minerd on Fast Money saying there needed to be a $2 trillion TARP program in order to stabilize this economy.
Well, I'm assuming that the president is speaking with Secretary Mnuchin. You could see how the market responds to him. You could see how the market is positive, knowing that he is working with the other side of the aisle. And I would imagine they're going to say to him, you need to have the market hold up over the weekend, because that's the worry, is that the market sells off into this simply because you don't want to go long over the weekend. You don't know what the headlines are going to be. So we'll see. The market is a wonderful referendum, as the president knows. And if we go into this long and we go and build on this momentum, the president is going to realize that the market says you're doing an all right job. It is a referendum on him today.
Sure. Craig, let me bring you into this, because we just heard from Carl Icahn last hour, who said there are a lot of stocks selling cheaply, so to speak, although he doesn't sound like he's jumping in to buy things yet. And I keep waiting to hear or see if there's any moves from Warren Buffett, which I think would say a lot to investors about whether valuations have gotten to the point at which they think they can buy great companies at good prices. What do you say about these levels?
Well, at Icahn, we are value investors, and there's bargains all over the place. There's a tremendous opportunity in terms of stocks being on sale. In a sense, it's a trifecta. You have stocks on sale, the Federal Reserve easing, and fiscal stimulus coming. That's as good as it gets.
Well, yeah, unfortunately, we're down 30% in a month. So everyone right now is trying to figure out, is now the time for me to get into this market, because the worst outcomes are priced in. The economy is going to get through this. The country's going to get through this. And if so, specifically, Craig, where do you think they should put their money?
Generally, in what got hurt the most on the way down, we would expect financials, technology, industrials, and consumer discretionary to lead the way out of here. It may take a few weeks here to form a bottom. There could still be some selling, but we would expect to be back to those all-time highs by the end of the year.